Good afternoon. Here are the closing market comments for Monday, November 8th. Grain markets were mixed today. Corn and beans a little bit lower, and a little bit of corrective action ahead of tomorrow's very important USDA crop report, while the wheat market saw some nice gains. December corn finished 2.5 cents lower at $5.85 and a quarter. July corn down 2.5 at $6.09 and a quarter. January soybeans down 9 and a quarter at $12.74 and 3/4. And July soybeans down 9.5 cents at $12.91. Kansas City December wheat up 10.5 cents at $7.96 and a half, while Minneapolis December wheat was up 5.5 cents, finishing at $8.02 and a half. Outside markets also relatively quiet today, and most of them correcting somewhat after last week's big moves. Crude oil this time is up 11 cents a barrel at $86.96. Gold up $10 an ounce at $1,407. The U.S. dollar index is 46 points higher at 77.16, while the stock market is 35 points lower, with the Dow trading at 11,408. Cattle markets saw a little bit of gains today, with the December cattle up 85 cents, finishing at 98.40, while the December hogs finished 20 cents higher at 67.15. We had a weekly export inspection report that came out this morning. Corn exports last week were 24.9 million bushels. That was at the low end of the estimates that ranged from 24 to 34 million bushels. Inspections need to average 38.9 million bushels to reach USDA's estimate, so you can see today's export number pretty disappointing. Soybeans came in at 56.9 million bushels. That was below the range of estimates from 60 to 70 million bushels. But when we look at inspections, we only need to average 27.1 million bushels to reach USDA's estimate. So the 56.9, still a very, very good number, well over double what's needed. Wheat came in at 15.5 million bushels. That was below the range of estimates that ranged from 17 to 23 million bushels. Inspections need to average 25.2 million bushels weekly to reach USDA's estimate. So again, similar to what we saw in corn, today's numbers somewhat disappointing. In other grain news, many of the outside markets are consolidating after last week's big moves and the announcement by the Fed. Argentine weather is pretty good right now, with planting 22% complete. That's near average. The overall trend is still towards warmer and drier than normal conditions, which is a concern and needs to be monitored closely. Ideas that China will need to import a significant quantity of corn this year are becoming more widespread amongst analysts. Imports of 4 to 6 million metric tons of U.S. corn would be equal to 157 to 236 million bushels, and as tight as the U.S. balance sheet is right now, we really can't afford to be seeing that kind of additional volume booked for export. Some much-needed rains could fall in dry areas of the U.S. winter wheat belt this week. Any rains that fall in the drier areas would be very welcome and much needed ahead of the winter dormancy. Tomorrow morning's USDA November report will be very important for price direction. That report will be released at 7:30 tomorrow morning. Let's take a look at the pre-report estimates for tomorrow's crop report. The U.S. corn yield is projected at 154.6. 1.2 bushels per acre below USDA's October estimate. That results in a production estimate by the trade of 12.556 billion bushels, 108 million bushels below USDA's October report of 12.664. Looking down then at the ending stocks, that would give corn 845 million bushels of stocks, and again, that is a reduction from the previous report, 57 million bushels below USDA's ending stocks of 902. Current prices are near contract highs, so we can see that the marketplace is expecting some bullish numbers in tomorrow's USDA corn numbers. In soybeans, the marketplace is expecting a yield of 44.7 bushels per acre, up 0.3 of a bushel from the 44.4 that USDA reported in October. That would give soybeans a production of 3.433 billion bushels, and that would be an increase of 25 million bushels from the 3408 that was estimated in October. As we come down to our ending stocks, the average trade guess, despite the fact that production is up 25 million bushels, the marketplace actually looking for a 22 million bushel reduction in overall ending stock. So despite the small increase in production, the marketplace expecting an even larger increase in demand. Most of that will come in the form of exports. China has been buying a tremendous amount of beans and shipping a tremendous amount of beans as well, and that's one of the reasons why exports are expected to be increased anywhere from 40 to 50 million bushels. In wheat, ending stocks are expected to come in at 855 million bushels, very near last month's USDA ending stocks number of 853 for wheat. So the marketplace really not looking for any major changes in the wheat numbers. It'll be the corn and bean numbers which really determine the overall price of the grain complex as we come into tomorrow morning's trade. Taking a look at our December 2010 corn chart, prices closed today at $5.85, very near the upper end of its recent trading range and near contract highs. The overall trend is still up. We may see corrections from time to time, and if USDA does not feed the marketplace with some bullish news, it's possible that this marketplace could consolidate in the upper end of the range between $5.50 and $6. But if the USDA comes out with some bullish numbers and does reduce the yield more than the marketplace is thinking, this market from a chart perspective does look like it's still in position to move to new highs. Turning to our January soybean chart, beans like corn remain in a very strong uptrend. Prices closed today at $12.75, very near the contract highs. If USDA would release some bearish information, we do have some consolidative action that took place back around 12:30 on the chart. That would be one area of a possible setback if the news was bearish. And then we have more major support down in the gap area around 1161. If USDA comes out with some bullish news, this market would likely then push into new contract highs above the $13 level, and I would expect that a lot of people looking at $13.50 to $14 as the next price range if we would in fact get bullish news. And taking a look at the December wheat contract for Kansas City futures, new contract highs for the move in wheat, new contract highs last week, and it has, in a kind of a delayed fashion, pulled wheat up into new highs for this move. We're now attacking that open chart area between the 782 highs from September and the 837 highs from October. And at this point, I don't see anything that's changed from our discussion over the last few weeks, even a month or so, in that the overall trend is upward. And as long as corn and beans are trending higher, wheat is very likely to trend higher as well. If corn and beans would have a setback, then wheat will be very quick to have a setback as well. So look for direction from the corn and soybean markets to give us our strongest indication of where wheat prices are going to go. That'll wrap up this afternoon's broadcast. Thanks for joining us, and have a good afternoon.